Good morning, everyone. It has been an excellent week for investors, if I may say so. And it's a time when I was expecting some some rough times, frankly. I was expecting that we were going to see a recession begin to appear, and my concerns were really not, they didn't materialize. The data is showing me that the opposite is happening. And that opposite is really moving the markets. Not only is the opposite happening here, we're going to go over the economic report today, which just continues to make everybody more aware that, hey, inflation is no longer a big problem. It is being tamed, and we don't have a big problem with inflation anymore. Now, as we look at the inflation data that came out today, the PCE producer index, it came in year over year. The rate of inflation, the core came in at 2.7, which is reasonable. It's in the twos, which is awesome. But the year over year, the principal measure came in at 2.2. Just going back 2 years, we were at 9 point something. It's like way high, and it was really painful for um, consumers. It was incredibly painful for consumers. At 9 point something, I remember eggs were being sold for a crazy amount, which you know was really painful for consumers. The food bills were really high. Restaurant bills went sky high. Just everything was really expensive 2 years ago. So it was a giant problem for the economy, for the country. We were dealing with pandemic. It was just like, man, we really dealt with some adversity beginning about 4.5 years ago to this point. And it's great. We got through it. We got through it. Hopefully, everybody that's watching made it through it in good health, and everybody's healthy once again. I'm very grateful for getting through it, and none of my loved ones really got hit too hard with the COVID. But we're done with COVID. We got into a really bad recessionary period that caused the Fed to attack inflation with interest rates. It attacked it with all its might. It went after inflation. It tried to break inflation by really increasing interest rates, and they certainly um, did the job. I mean, look at this result. Federal Reserve, I will toast my coffee to you. And good job. Keep doing what you're doing. All right. I haven't toasted on this live stream yet, and I guess there's a first time for everything. So we have inflation being tamed here in the U.S. We're seeing that the growth rate of our GDP is reasonable. We're not setting any records, but we're not going into a recession. And I'm one that felt like, I'm beginning to see some things that lead me to expect that we are going to see a recession. And the reality is, we didn't see it. We didn't see it. So at some point, I'm believing the data. Data's data. The way they produce these reports, the economists, they have no agenda. These folks are purist at heart when it comes to economic data. And this data has been measured for, geez, I'm going to guesstimate 100 years. And I'm not exaggerating. This is the kind of stuff that the government's been measuring. That way they can keep tabs on how the economy is doing. So these measures are very well founded. They use statisticians, they use the right science, and they get to these results. So it does interrupt kind of a expectation that I had, but here's the data. One more piece of data showing inflation's tamed, economy's okay. Not only was this good news, but the news out of China was great. China is going to grow at a 5% rate, which is really high, much higher than the US. The Chinese government, which was pretty hard on its economy and its industries and the companies that operate in China during the COVID years to really try to, they went through a different path to try to protect their society. And that's what they decided. I'm not going to criticize that, but I'm just going to say that they caused some companies, some industries to completely halt, and that was very disruptive. Supply chain issues that we were dealing with a year, 2 years ago. It was, I think, partly to do with all the shutdowns in China. If they were not allowed to go to the factories to produce product, that product didn't make it into the supply chain. A lot of things were interrupted because of COVID and the way that the Chinese dealt with it. So, really good news out of China. And that created a lot of excitement with stocks for China based companies. So much so that if you look at, if you look at Chinese stocks like Alibaba, NetEase, JD, I mean, there's a lot of green on the screen here. And these are big numbers. For the week, Alibaba's up like 19%. Some others are up much more. It's now the China stocks have been beat up for so long, right? We've seen them so low for so long that it's a little bit of, hey, let's be careful with this. Let's not jump in too soon. Let's make sure this thing's real. So the economic data is real, which is GDP is going to grow. It kind of makes logical sense that this economy is going to rebound. This is the second biggest economy on earth. Okay. This is potentially going to be the biggest economy at some point. They're just growing faster than the US. And at some point, they will be a bigger economy. They have a higher population of people, so they could have more output just because they have more people. China is integrated to the world. I don't know that anybody's going to argue with me. You go into a Walmart, I'm going to guesstimate at least 70% of the products that you are going to buy at Walmart originate in China. You go into Home Depot, pretty good percentage. You go into massive retailers, you go on Amazon, and China really is everywhere. And they're growing into products that are more expensive. Cars, they're already in electronics. I mean, if you look at computers and peripherals, they're made in China. The iPhone's made in China. So just a lot of things. For me, there's a lot of things that I like about Chinese stocks. And I'm going to be careful, but this could be the awakening of a big long-term winner for me. I already own BABA, but I analyzed JD. I released a video, I think yesterday. The Discord community voted. That's the one that Discord, users were most interested in. I'm going to move from JD to probably NetEase or Baidu. I'm probably going to analyze the top 10 companies here, except for Yum. I don't want a restaurant. I don't care if it's in China. I'll probably skip to Neo at number 11. And I don't know about Prudential either, but we'll see. We'll see when I get there. I haven't gotten that far. But I think that the China play, I'm going to monitor it because I certainly have a very good collection of stocks here in the US. I like my stocks. I just think the US stock market is expensive. It's like, man, it's uncomfortable. It's like PEs are really high. The appreciation over the last 2 years has just been incredible. Thank you, universe. Thank you for all that appreciation. It's great to see my portfolio where it's at. But how long can that last? Is it just going to keep going up to the moon? I don't think so. I think that it's gonna, if anything, the appreciation of the US stocks is gonna slow down. Okay. Now that's reasonable. We might have a correction. That's possible. I'm not saying it's going to happen. I don't know when it's going to happen, but they're natural. They happen. Now, the Chinese stocks have been held back for 3 years. And if you go back 10 years, Chinese stocks were really performing well. I would say from 2010 to 2021, man, it was a very good sector of stocks. Investors that got in early just made a killing. And we got into COVID and we got into a couple of very big factors that crushed the Chinese stocks. One of them is that, their economy slowed down. Like mentioned, COVID had something to do with it. And part of it also was that the Chinese began to really invest in real estate and hard assets. And those investments, especially in commercial real estate, have proven to be bad investments. Now, the thing about the Chinese government is that they're stepping in and really helping companies. I mean, they're going out of their way to help and prop up their publicly traded companies. That's there. I mean, you look at everything they're doing. They're going much further than the U.S. Federal Reserve. Not to kind of have a competition here. It's just the Federal Reserve in the U.S., their main objective over the last 2 years was bring down inflation. Mission accomplished. It's 2.2. That's excellent. Good job. If you asked me 2 years ago, where's inflation going to be in 2 years? I would have guessed. I'll be happy if it's under 5. And it's well under 3. It's at 2.2. At that inflation rate, now the Fed's pretty much in a very good position. There's no big pain going around for the country. They continue to lower interest rates. I'm not going to question what they should do or not do because they've gotten the results that we all wanted. So Fed Reserve, you do whatever you think needs to be done. I am a little surprised that if the data is this good, that they're going to keep cutting interest rates so fast. It's like, well, I guess you're going to stimulate the economy and make it grow again. Maybe make it grow at a higher rate. We'll see. It'll be interesting to follow. But the economic data has been great, and it's been really good on the Chinese side too. That combination is really creating a different environment that I felt we were in about a month ago. So I'll keep researching these Chinese stocks and see where there is value. So good morning, Shadow Guy. Buenos dias. Omar, AAP. AAP. We'll see if we have time to take a look at that guy. I've got a list of stocks I wanted to look at, but we'll get to it. Tomas, good morning, sir. Buenos dias down in Argentina. Argentina, man, I've got like 100 locations on my bucket list, but Argentina most definitely is. I would love to go check out the big cities of Argentina. I'd also like to go to Patagonia. Beautiful place. Everything I see on video is just amazing. So good morning, sir. And then L. James. I love Pfizer under 29 plus their dividend. I too really like Pfizer, and I think there's a lot of value there, and it's gonna be unlocked at some point. I'm long Pfizer and continue to stay long. I've done videos on my channel. I encourage you to take a look at them. They're on my channel. You can take a look and see what my logic is behind that statement. So, oh man, you live in Patagonia? Oh man, I'm a big outdoor guy. I love the outdoors. I've done the outdoors in the US. I've done every like cool place to go to, just about. Been to Canada. And I'd love to go down to Patagonia. So we will see, man. A lot of things to do. All right, cool. So economic data is positive. Today, bonds, the yields are going down. This is the first day this week that I've seen bond yields go down, which means bond prices are going up. So, opposite effect. I'm not going to buy bonds today. But for 4 out of 5 days, the yields were going up, which was also interesting that the Federal Reserve is cutting interest rates, but the bond market was increasing yields. And the yields increase when bond values are going down. So it was an interesting week. I'm glad that I bought into some long-term bonds and think I'll be happy that I did so in a year or two. My style of investing is to make decisions today that are going to make me money for the next 5 years. That's my style. I'm not aiming to make a lot of money this week and then figure out next week. And then I'm trying to figure out how to sustain very good income, very good appreciation year after year after year. If I have a long-term view, I think it's more productive for me. And these interest rates allow me to put some money into bonds, fixed income, which is a solid investment. That's just going to come in at a very good appreciation, not appreciation rate, but I would say a return rate. And not most of my investments are in stocks. Real estate's my number one kind of category of my overall wealth. But then after that, it's stocks, then bonds, then crypto. So James, can you send me? Yeah. So the video on Pfizer is on the channel. And if you go to the channel and just search Pfizer, it should come up. And, if you have a hard time, just contact me. I will send you a link, but you should be able to search for it. I have a couple videos on Pfizer. It should come up fairly quickly for you. Android PC, good morning. All right. Omar, should I start creating my wealth in stocks or real estate? So I like the question. So real estate is local, right? I'm in Southern California. So I could tell you about real estate in Southern California, but it could be a little different depending where you're at. There might be a lot of economic growth where you're at and real estate's appreciating. But I think that in Southern California, real estate right now is very risky. It's a treacherous market. I would not invest in real estate. I already own real estate. I'm not selling it. I sold a real estate property in 2022, and it's proven to be a really good idea. And having said that, right now stock prices are a little expensive, but I think if you invest correctly, you're going to do okay in stocks. You're going to do well. The one thing I would encourage you to do to create wealth is invest invest your time, your passion, your intelligence, and keep getting better. Learn something every month. It could be small, it could be big, it could, just try to have a mindset of you're just going to keep improving. Every investment you make, try to learn something from it. Because if you continue to learn, become a better investor, you're going to wake up 5 years from now and you're just going to more intuitively know how to make money. Like I'm investing in bonds because I've invested in bonds for a long time. Intuitively, I know, okay, I'm going to put that money away. It's not exciting, but it's going to make me money while I sleep. And intuitively, some companies, like Meta or Uber, companies that I really believe in because I've studied them and I've tortured the numbers to make sure I feel like that's a really good investment. When they drop in price, man, intuitively, boom, it's a very natural decision. Like, okay, I'm going to buy more of that. So I would encourage you that the way you're going to become really wealthy is if you become a very good investor, and that's going to be by really practicing the craft. I put a lot of finance formulas, in my videos and so forth. Try to understand the formulas. Don't just be satisfied by saying, "Oh, a PE of 12 is a good PE." Okay, that's good to know that. But the most super investors and like the professional investors, they discount free cash flows, which is complex. If you can understand that mathematically and understand it logically and understand it how it flows through a business, you're that much better prepared to know when you're looking at a good business. And same thing with earnings per share. When you value a company based on earnings per share, study financial statements. So learn, and you'll become a very wealthy person. I'm imagining that if you use the word start, you're probably younger age. Um, and I encourage you to do that. I also, when I was early 20s, I sought out the advice of people that I thought, had something that I wanted, which was, success in business, success in investing. And I reached out to them and asked for their mentorship, and every single one said yes, and every single one was willing to help. And my channel is a big part of that, which is, you have a community of people that come together. The goal is to really just grow our wealth individually. And I think if we share experiences and share knowledge, we're going to be that much more capable for us individually to make decisions to really grow our investments. So, all right. So I feel stuck to have some money. Yeah, it's a big decision. I think you ought to weigh it carefully. But yeah, so I don't know the market in Houston, Texas. I couldn't give you any advice there. I would say that I would reach out to 3 people that you feel they're wise, that know the Houston real estate market, and seek their advice. Don't lead the witness and tell them, "Hey, I'm close to buying this house. What do you think? Do you think I should do it?" No, just ask them open-ended questions of, "Hey, what do you think about real estate?" And let's see what they say. And then they will naturally tell you, "I think real estate is looking good in this area," or they'll just say, "Hey, the market's terrible." Like I would say, I have 2 sons. They're 24 and 20. And if they asked me, "Hey, what do you think of real estate in Southern California?" I'd say, "Wait a couple years. I would not buy anything in Southern California for a little while, because I think some things have to sort themselves out." So good luck with that. Good luck. And keep asking questions, keep learning, keep advancing your skill set. All right. So let's take a look. I'm going to start on the other side of the Pacific. I'm in California, and it looks like the stocks in China continue to climb up a mountain that they fell off of 3 years ago and continue to appreciate. And Hong Kong is up. Japan is up. Man, over here in the US, the stock futures up again. Man, I can get used to this. I could really get used to appreciating stock prices. I could really appreciate a more favorable economic situation than I expected. I'll take it. I will take it. And crude prices are down again. Man, at what point is crude going to stop going down? Are we going to start getting free oil? It's really looking like we're going to get really, really low. Again, oil prices, like energy, is a good part of the consumer's budget, of basically a company's budget, especially airlines. Airlines rallied this week because low oil prices. That's a big cost component to running an airline. So it really helps the economy when oil is down. So it doesn't help oil stocks like Chevron, which I'm a stockholder in. But hey, that's part of the game. When you diversify, yeah, my Chevron stock is not doing well, but everything else is. And everything else is going to carry that Chevron stock. At some point, Chevron will start to work, and I'll have it in my portfolio. Shadow guy. I agree. I was investing for years, but hit a wall because my mentor was a day trader. But I am more of an investor. Now I'm here. You make a good point. One thing that I picked up from one of the super investors that I like. It's kind of old school, but it's Peter Lynch, and he is old school. It's not kind of old school. He's old school. He was a very dominant trader. Like he was the best, what you would call a hedge fund manager in his day. He was the best. He was like for 6 years, he was just the best performing mutual fund manager. And his background's super interesting. He does not have a finance background. He did not have a finance background. He worked at Fidelity Investments in some other capacity, and he saw what investors were doing. He said, "Hey, I'd like to try that." And the company went out on a limb and gave him a try. And he was incredibly successful. One of his philosophical points that is really, I think, great advice is do things that you have an information advantage on, or a knowledge advantage on, or a culture advantage on, something where you have a body of knowledge or experiences, or your family has been in this particular industry. Go to those places and make that kind of where you operate a lot, and buy stocks in because you have that advantage. Also get to know what type of investor are you. Do you like day trading? Do you like being a trader where you're looking at patterns and looking at, all these charts, and then, firing, on one investment and then being in it for a couple hours and then out? Now, I could see that could be interesting for a day or two, but speaking for myself, I like making money over time, and real estate's definitely that's the case. You know, you own a real estate asset for like 20 years and you go, holy smokes, now it's worth a lot of money and I have a lot of equity in that property. But if you saw it on a daily basis, a real estate asset does not appreciate very much on a daily basis, and you can't really measure it that precisely. And some stocks, they'll move just quite well. One stock, Elevance, right? Healthcare. It's doubled over 5 years. And it's been somewhat of a nice, smooth upward and to the right chart. If you monitor that stock on a daily basis, you probably don't see those moves all that much. It's healthcare. It's a little bit boring. But over the course of 5 years, boom, doubled my money. Perfect. That's what I want to do. That's who I am. That's how I want to invest. So get to know first what your advantages are as an investor. Where do I have knowledge? Where do I have passion? I love, whatever. I love, coding and software. Well, make that kind of one of your base kind of investing sectors, is looking at technology companies, or it may be a different industry. Make that kind of like, get to know that industry really, really well, because you could probably pick out a winning company. And then if the fundamentals are very good, then you probably have a very good investment. So good stuff. Keep it coming. So Tomas, can you look someday on Recruit Holdings? Yeah, we could look. So Recruit Holdings, and if you have a symbol, that'd be awesome. I'm going to try to find it. Recruit Holdings. Company Ltd. We'll take a look at that. Gasoline is down. I agree. So Mike, good morning. I'm so heavy in several oil stocks. Since the rest of the market does well, I will continue to sell stocks for gains. Yeah, I mean, I see your point. I would just one cautionary note is I like looking at the returns for stocks and sectors, right? So when we look at energy, and I went one step too far. So you look at the 5-year return, it's okay. So just be aware that it's a sector that I'm glad I'm in, but there's other sectors that just are fabulous, like consumer discretionary, 252% return over 5 years. Communication services, 123% over 5 years. Healthcare, 164. Technology, of course, 588%. Industrials 130%. So there's just other sectors that, you know, I have one energy company, and a big influence on that is looking at data like this, which is it's not it's energy is not a high like compounding industry. And I think when you look at technology, you're seeing a compounding of returns. It's just been doing so well year after year, the exception of 2022, that it just keeps adding to that return. And energy tends to go up and down, up and down. And those down periods are what's keeping the compounding from really working. So just be aware of that. That's one thing that I take into account, and I try to limit my investments in oil. But I know you know what you're doing, Mike, and just wanted to share that with you. So 698. So I think it's going to be 6098. I'll try to find that one. So it's a Japanese holding. Cool. So the Japanese economy has done really well, or at least stocks have done really well. And that's after a long period of doing terribly. They finally took off. Yep. Good stuff, Mike. I know that you're diversified. All right, cool. So let's start looking at a couple companies. We went over the market. The market has opened. Let's see, it opened in the positive. Looks like we are off into the green. Looking good. Looks like the Russell's showed up to play, up 0.57%. Looks good. All right, so let's get into a couple stocks, and I'm going to try to find this Recruit Holdings out of the gate. And I got some other stocks that I want to look at. So okay, so it looks like I'm able to see it. So Recruit Holdings provides HR technology business solutions that transforms the world to work. It operates through three segments: HR technology, matching and solutions, and staffing. Okay, so they both do software as well as services to help employers find employees and staff, maybe companies that need employees either temporarily or permanently. It's a pretty good big outfit, 51,000 employees. They were founded in 1960. They are up 93% over 1 year. Japanese stocks have been doing quite well. And if you look at, in the past, they, especially coming out of like the 1980s, and I know I'm going back a while, they kind of didn't do much for like 20 years. It was a pretty bad market, but it's really been working recently. So this one's up 93%. We are dealing with a Japanese currency. So that's why you're seeing such a big number, 13.86 trillion. And then revenue is 3.47 trillion. So they're profitable. Okay. PE is 40. And kind of a homework item for you is understand, I don't do a lot of research for Japanese companies. If anything, I probably should do more. I haven't looked at a Japanese company, I don't know, it's like 6 months, maybe a year. But I've recognized that, who's been in Japan is Warren Buffett. He's been in Japan investing, and so have other investors that really know what they're doing. So the homework would be take a look at PEs, both for the market, like what's the average PE, and we can ask, let's see here. All right, Meta, let's get to work. What is the average PE for the I think I misspelled Japanese, but I think Meta is smart enough to show us an answer for that. So the average price to earnings for the Nikkei it's 225. Wait, couldn't find it. So this is Bing. Bing uses ChatGPT. So it's saying 17.6. So if the average is 17.6, then the stock we're looking at is well above the average. So the other point that I would say is try to get to their industry, right? Because they're in a sector, they're labeled as industrials, but yeah, I guess I agree if they're doing employment services. So that makes sense. So I would just understand, it seems like their PE, judging from US PE ratios, it's higher than the US ratio average. But try to get a sense of in Japan, is that a high PE? Is that a low PE? From what I just pulled, just one data point. So do your homework, maybe look at 3 data points, see if it seems expensive. On the, if this one, you should be able to cash flow. And I know you'll have access to my model, Tomas. I'll give you access to it. And you'll have to convert like the Japanese currency. It's easy, right? So it looks like, if you took a Japanese yen, you would multiply it times 0.007, then you'd get to US dollars. And I use US dollars. You may use a different currency, but that's how you can get it into the framework of US dollar investing. And then kind of go through and try to complete a valuation on this. So revenue, and it's hard to kind of get my head around it because it's 0.007. The math is not easy, but I'll look at the growth rates. A little bit of growth in the trailing 12 months. It has kind of hit a plateau. It kind of grew nicely and then it's kind of leveled off and stayed somewhat without growth. Look at the quarterly. They have begun to grow in the most recent quarter that they closed. They're already in their fiscal year 2025. So that's why you see Q1 2025. All right. So their revenue growth they're beginning to grow in the quarter. They did hit kind of a plateau period. They are profitable. They have earnings per share. They have free cash flow. And looking at that, I mean, the free cash flow here, 598. So this is 4.2 billion in free cash flow. And that's in millions, right? So, yeah. So 4.2 billion in free cash flow, which is very good free cash flow in the trailing 12 months. They're not really growing, so I would say this company is worth, somewhere in the neighborhood, as long as their balance sheet is quality balance sheet. So they have this much cash in yen, and they have less debt, so very good. So they have probably about 700 million in cash. If I do it in my head, that's about how much they have. So 13.86. So we had 4.2 billion in free cash. I'm going to write that down over here. And then we have 13.86. And this is in trillions. So this would be, let me get rid of this guy. So to me, it seems overpriced because this is 97 billion in market cap. And the best value I can put on it based on a 4.2 free cash flow rate, and then adding the cash surplus they have, I'm looking at a 40 to 50 billion dollar value of this company based on their free cash flows, but they're being priced above 90. So that seems a little too expensive on this company. Just kind of doing the back of the napkin. Understandably, they went up 93% over the last 5 years, 178%. Now, one thing I would caution you on is if they're up 93%, their stock price, when we go to their financials, I don't like seeing flat sales. It's like, well, what am I missing here? If they're growing, if the stock price is being appreciating at 93%, their revenue should be on a upward trajectory as well. It shouldn't be on a flat trajectory. It should be on an up trajectory. Or maybe the market's caught up in some excitement about the company. I'd have to research it, but they've been around since 1960. It's not like they created something brand new that's super exciting. So that's one thing I'd be cautionary or be cautious about is this stock currently priced too high and the market just fell in love with the stock. Yeah. So, I like that you're thinking about Japan. I mean, I'm thinking about China quite a bit. The one thing that I would say about China and Japan, a difference is Japan is a pretty established, kind of mature financial market. So they feel like, hey, we just run somewhat solo. We don't care if we're not listed, if we're listed in the New York Stock Exchange. We don't need American investing. We got plenty of money. We've been good at what we do, making cars, technology, all kinds of stuff for a long time. We're very well capitalized. And that's the case. But it makes it hard for an American to then invest in Japan. It makes it harder. I wanted to invest in Nintendo. I mean, everybody knows Nintendo. I've known Nintendo since I was knee high. Very good company. And it was just really hard to buy into Nintendo. My broker would charge me high fees to get in, and I'd have to pay high fees to get out. And I just thought, there's plenty of good stocks for me to buy here. I won't, deal with that. Chinese stocks have kind of made themselves very investable by U.S. investors. They are listed on the New York Stock Exchange. When they get themselves listed on the New York Stock Exchange, they have to follow the SEC rules, which means they have to provide financials every quarter. They provide financials using, accounting firms that help them get their financials ready so an American investor can look at them, understand the health of the business, understand how the business is operating. And I would say BABA does a really good job. BABA does a very, very good job. I really like that they communicate very clearly and they tell you what's going on with the business. You don't get that out of a Japanese company. They're like, hey, we're a Japanese company. We have plenty of money here, plenty of investors. It's not that we don't care. We're just not going to deal with the New York Stock Exchange. So it makes it harder for me. So that's why I'm like, I have to pump the brakes on investing in Japan, even though I think some of their businesses are excellent. So that's my 2 cents on Japan. Thank you for bringing them up. It's cool to kind of think along those lines. But right now, I'm mostly excited in China. I'll try not to say that too many times. Trader Pratt, good morning, sir. How are you? Very good to have you. Thanks for joining. I really appreciate it. And really enjoyed your live stream last night. It was pretty active last night, man. I think people were in the mood to say a lot. All right, cool. So we went over Recruit and didn't see any other suggestions out there. Actually, there was one more. Excuse me. I think it was Omar wanted to look at AAP, right? So, okay, cool. Let's take a look at AAP. So Advanced Auto Parts, we looked at this like 2 days ago. Um, this was a bad situation because of their balance sheet. So of course, with stocks, there's like hundreds of data points that you can look at. It could get really overwhelming. So I try to keep it simple, right? And even my simple format has pretty complex calculations and so forth. But obviously, I measure on cash flow, try to value a company on cash flow, and I have an influence of earnings per share. I look at earnings per share, try to value it that way. And that's kind of like the basis of evaluation. Qualitatively, meaning I look at the business and try to use like numeric data to kind of assess, hey, is it a good business? Does it make sense? Is the economy going to help them or hurt them going forward? But one thing that is very important is the balance sheet, because you can have a really good business. They have great ideas. If they have way too much debt, they're not going to get anywhere. They're just going to be working to pay their debt off. It's almost like an individual that has too much credit card debt for whatever lifestyle reason. They're like, I want to drive a Lamborghini and I want the nicest clothes. If I spend less than $300 for a shirt, I feel like I'm doing something wrong. It's like, whoa, man, you got a lifestyle. It's really expensive. And you're a doctor, but I don't care that you're a doctor. You're still falling behind because your lifestyle is just too expensive. The balance sheet's somewhat like that. If they borrowed way too much money to do whatever they thought they needed to do and they continue to borrow, it's always going to suck out the profits and suck out the cash out of that business. And at some point, may be a showstopper for the business. They go bankrupt. And I think this one here, if my memory serves me right, they have cash of 479, but long-term debt. So we had total debt of 4.4 billion. And so net, they have 4 billion in debt. And when we look at their EBITDA, which is earnings before interest, taxes, and depreciation, it's a metric where analysts, investors believe that is your ability to pay off that debt. It would take this business more than 10 years to pay off their debt. That's somewhat irrational. That's like a person having so much debt, they would have to work full time for 10 years, more than 10 years, just to pay off what they owe. And if you think about that person, hey, could they buy a new car? It's going to be really hard. Can they say, hey, I want to get a master's degree? Whoa, you can't afford it. I'd like to buy a house. Not so fast. You're not going to be able to afford it. You're not going to be able to grow. And a business is similar. Will this business be able to grow? Are they going to have a hard time making their debt payments? Is the next question. There's a lot of questions there. So it was a showstopper because of their debt. And that's why I use the balance sheet as they have to clear that hurdle. They don't clear that hurdle. And if they're really bad, like I just showed you, it's okay. I stopped the analysis. I'm like, okay, I have thousands of stocks to pick from. I'm going to pick stocks that have a healthy balance sheet. So thanks for asking on that. We analyzed it a couple of days ago. I'm not going to go through much more because that's the linchpin. That's the one that says, do not proceed. That's a risky business in my mind. And the cream of the crop there is AutoZone, but AutoZone is an expensive stock. And whoever bought AutoZone 10 years ago, congratulations. You did really well. All right. So we went into Merck. So Android PC, Merck, pharmaceutical, animal health. Okay. And then you're more into NVO, which is Novartis. Okay. So I did look at Merck on my channel. I did a full video, I'm going to say 2 months ago. And the conclusion was not favorable. I thought that there were other pharmaceutical companies that looked better, but let me take a look and see where we're at. So this stock has done okay over the last 5 years. 43% is just okay. It's a nice way of saying that it's not an A grade. It's more like a C, C grade, just passing. 43% is okay. Because you're making 43% plus a dividend. Okay. Ideally, this should be like 100% or 75%, somewhere up there or better. It's a big cap pharmaceutical company. It's a very well-known company with a lot of drugs that are under patent, so they're protected. They have a very steady business, and investors like steady businesses that continue to grow. They have $62 billion of revenue. So roughly you're paying 4 to 5 times revenue for the company. The PE seems reasonable at 21 and then dropping to 13 next year. It is discounted according to analysts, and they use earnings per share, but I use free cash flow. Now, when I looked at them, let's take a look at free cash flows. I think that's where I didn't see enough, and I saw that other pharmaceutical companies were doing better, but that's probably not it, because that's a pretty good cash flow number, 13.1 billion. They did have, when did that come out? So the previous year did dip. You can see that pharmaceutical companies generate free cash flow. Once they get drugs that are needed by people to take care of illnesses or conditions, they do really well because the manufacturing cost is really low, and they may have a profit margin in there to recapture the research and development they had to invest to get the drug discovery phase done and be able to have that drug. So 13. Now let's take a look at their growth. So they are growing. So this company is worth like 260 billion or so. Could be a little higher. Let's see what their balance sheet tells us. They have $11 billion of cash. What's going on with debt? So $37.7 billion of debt. So net debt's about 26 billion. And when we look at their EBITDA, their ability to pay off that debt, it is 23 billion. So in a year and a half or so, they can pay off all debt. Quality balance sheet. You see that EBITDA is a factor of, that's how much they're generating so that they can pay off debt. So balance sheet looks good. The valuation, on the other hand, I think they're fairly priced, or they're priced at a slight premium according to cash flows. And I did a full I wonder if I kept I probably did not keep my analysis because it's not a stock that I'm going to follow because I already have other stocks. And the symbol is MRK. Yeah, I didn't keep my analysis, but I do have the video. You can watch it. It's like 2 months old. It should still be of value if you want to take a look at it. It'll really get into every nook and cranny that I get into. But I think it's fairly priced, or priced at a slight premium. I think there's other options in pharma that give you potentially upside. I've talked about Pfizer earlier. I really like Pfizer, but there's some smaller companies like United Therapeutics. These guys are also biotech, but right now their principal treatments are more like a pharmaceutical, and they're smaller than Merck. 16 billion in market cap. Just a really interesting story if you follow their history. The revenue is 2.6 billion. They're profitable. They generate really good free cash flow. Look at that PE. And when you look at their stock price, it's really been working. And see, that's exciting. And you look at their revenue, that's exciting. So they're growing at a really good clip. You look at both their current business and you look at what they have in the pipeline potentially of cures and things they're going to do, the science behind it, and it blows me away. I'm so impressed. And I'm doing quite well with this investment. So this is in my healthcare pharma bag. Catalyst Pharma is in there. Man, I am not typing as well as I should. Catalyst Pharma is a little bit like what we just saw. It's doing well. You know, you look at the valuation. PE is a little high this year, but it's dropping next year. You look at their growth rate. Isn't that exciting? 43% growth. Beautiful. That's exciting. Whew. Catalyst Pharma. Their drugs are good. They use their cash in a positive way, which is when you have a successful pharmaceutical company, they're very good at drug discovery, right? Which is the science behind, hey, there's this disease. We think we can find a treatment that'll make the conditions around that disease control them or potentially eliminate them or whatever, or make it more comfortable for that person to deal with that illness. But they also become really good at seeing other pharmaceutical companies that are maybe smaller than they are and acquiring them. And that's what Catalyst has been doing. They've been using their profits. And so United Therapeutics, not so much. So Catalyst is doing that and Pfizer is doing that. So they've acquired other businesses where they're like, hey, that's a really good drug. That's one company that owns that one drug. We'll acquire them for $500 million. But then we just added 50 million of revenue or something at a really profitable clip. Catalyst has been doing that quite well. So I like that about them. So when we talk about healthcare, it's a sector that I like. Back to the Peter Lynch example that I talked about early in the stream, is pick industries that you can understand and have some experiences in. I was an accountant. I worked at a couple industries. One of them was pharmaceutical, and got to know the drug discovery processes of how that's done, the manufacturing processes. I was an accountant controller, and I had to know all the numbers. I knew what the capital was going into the factories, and knew how they had to deal with inventory, the FDA, all that good stuff. So that experience enabled me to then understand other pharmaceutical companies. So I used that life experience to my advantage. And that's an example of the Peter Lynch mentality is, hey, go to places, go into industries that you can really get your head around. It's just because everybody's investing in, let's say nuclear power reactors and stuff. I kind of understand nuclear. I understand the output, which is electricity, but am I an expert in nuclear? Never worked for a utility company. That is going to be outside my domain. And just because everybody's investing in it is not enough for me to be an investor. I have to understand it. Like I understand oil companies. I worked at an oil company. Software. I've been in the software industry for a long time. Healthcare. I just talked to you about healthcare. My sister is a doctor. And one of the early jobs I had is I implemented all the software for her practice. And she was an individual practitioner. Got to know the billing of healthcare providers because I implemented that software and operated it. So those are the experiences that I take into my investing world and try to find companies that I think are operating quite well at really profitable amounts, generating a lot of free cash flow. So pick those lanes that are really kind of, if anything, second nature to you. You have a knowledge advantage. So Omar, Meta AI, pretty good tool to invest. Absolutely. I've been very impressed with Meta. I was asking it earlier. I did a short. I don't know if you guys saw it. Um, and I didn't use this particular browser, but I'm asking it to do fair price evaluation based on discount or free cash flows, and it does a pretty decent job. As a matter of fact, I asked about Costco, so let's ask it again. So, what is the fair price for a cost stock using discounted free cash flows? See if it's consistent in its answers. Very good. So it's giving you all the data. I mean, for me to do this manually, I go to a couple different sources and I put it in my spreadsheet. I like to do it manually because when I understand the numbers, I have a very good understanding of the company. But Meta AI is providing a lot of value to me. And I'm going to keep using it because if anything, it's nice to compare against, Meta AI and its results. It has good structure to it. If it's this good right now, which is kind of early in its life or, release, in a year, it's going to be even better. In 2 years, it's going to be even better. So I practiced on Meta AI, Gemini, ChatGPT, and a viewer brought up a different large language model AI app. I forgot the name of it. And I've tried to use Grok, which is an X product, but they charge, and I can't subscribe to everything. Meta AI is free, by the way. I could subscribe to free, but I've already have paid subscription to YouTube. I have paid subscriptions to a bunch of different sources, and at a certain point, I have to like pump the brakes and go, okay, I have Meta AI. I am a Gemini subscriber. ChatGPT, I pay for a subscription, but it's for my son, so I can pirate his login if needed. So again, at a certain point, I've got to limit the number of subscriptions I apply to. But Meta AI has been the most impressive one. At this point, I'm going to keep playing with all of them because I don't want to fall behind. I think tools like these will be just an additional tool in the tool bag for us. If you think about the calculator, right? 100 years ago, they didn't have calculators. So they did everything by hand. And I've seen like pictures of, um, university lecture halls where in mathematics, um, the professor would have chalkboards that would be like, geez. I mean, they were street artists, graffiti artists before graffiti artists were around. They would like literally have a chalkboard that would be 40 feet wide, not exaggerating, and they would be doing all these, mathematics by hand. Impressive, because if you know how to do it by hand, you know the mathematics. But then the calculator came out, boom, game changer, and people use that as a tool set. We came out with financial calculators, boom, game changer. You have to know that, like, to do some of these formulas, if you just put in the numbers and you don't understand the mathematic, the arithmetic, you don't understand the result. So it's really important to know that. But once you got a calculator and you know the logic, you can use that calculator as a tool to make your analysis faster. And I feel like Meta, as well as other AI apps, are just a more sophisticated calculator or spreadsheet or Google Sheet, so to speak. So I'm going to keep using it as a tool. So far, so good. I keep double checking it because I don't want to use a number that is just kind of a black box number that's wrong. And then all of a sudden I make a bad investment. So thanks for bringing that up. So Meta AI may not be available in non-US countries. That's too bad. Set the country does in Facebook. Oh, okay. So there's a cheat code. Thank you, sir. You always bring good comments, by the way. And it's Yogi, I believe. So if you VPN, and I've done this when I travel around the world, sometimes like I'm outside the country and I try to go to some of the sites that I use when I'm in the US, and it says, oh, we don't provide it in this country. But when I go on VPN, you basically become kind of invisible. So then you could go to any website you want. So that is a cheat code, by the way. Very good suggestion. So get VPN software, and then you can go to any site you want, and it won't block you. So thanks for suggesting that. Can you look at DEC? Yeah, we can look at that. So I'm not familiar with DEC. So diversified energy and utilities are on fire. But this one is down. Okay. It's down over the 5 year. It's down over the 1 year. I guess they IPO'd recently. The market cap is 528 million. Revenue is 699. They are profitable. Okay, so what's their story? Diversified Energy Company PLC operates as an independent owner-operator producing natural gas and oil wells, primarily in the Appalachian Basin of the United States. The company is involved in production, marketing, transportation of natural gas. Okay, so these guys are natural gas, crude oil. Okay, so they're a oil and gas exploration and production company. So they're in the energy sector. And right now with low oil prices, that's probably what's causing this depreciation in stock price. So this is a little bit like Occidental. And you can see the loss in revenue. It's primarily because of that, per barrel price is down. So they're profitable. Let's take a look at their balance sheet just to make sure they're not getting themselves into a lot of trouble. Very little cash. And total debt is $1.7 billion, right? Yeah, so 1.7. And if we look at their EBITDA, so they're 1.7, they have 493 in EBITDA. So they're going to be able to pay off debt in 3.5 years, maybe 4. That is a little risky. It's a smaller company. It's tied to oil. Now you see where when you have a single commodity or a couple commodity that are going to drive your revenue, it could get pretty dicey for a while. And they have like $3 million of cash. So this one here would be a pass for me. It's just a little too small, and they are in an industry where it can get quite painful when these oil prices drop. So this one would be a pass for me. There's a lot of options in this space. You have Occidental, you have big oil, integrated oil companies like Exxon. So that is DEC. So Omar tried to look at AAP on Meta, didn't give you a price. Interesting. Yeah, I think you can play around with the question and see if it'll get you some good information. All right, so let's take a look at the market. We are still in the green, but a little bit flat. That's fine. Russell's doing quite well. So what's moving today? What is moving up and down? Let's take a look at by industry sectors, the 1 day. Energy. What the heck? Why is energy moving? Is this right? Did oil prices bounce? So oil prices are still down. So that's a surprise that energy is doing well today. That's interesting. Utilities are up, consumer discretionary, real estate, communication services, industrials. So it's a pretty green day. Technology's lagging a little bit. And what about our friends over in China? What's going on out there? So Alibaba was up today. JD was up. Neo, holy smokes, 11. This week, Chinese stocks are just crushing returns, just making it happen. If this has legs, if this is going to last for a year or two, that's why I'm like paying so much attention to China right now. Is I don't have overexposure to China. Hey, I've got one investment in Alibaba. At this point, it's getting pretty favorable. Well, how about if I had another, maybe two? Because I really like the economic data that I got from China, and their government is not keeping it a secret that they're going to try to make their publicly traded companies appreciate in value. Gabriel Valenzuela. So let's take a look here. I think you have a symbol in there. Is IONQ quantum computing. Wow. All right, let's take a look at this one. So IONQ Q Inc. All right, so these guys engage development general purpose quantum computing systems in the US. It sells access to quantum computers in various cubic capacities. Now, I know technology, but I don't know quantum computing. I'm not sure what the difference is. So they sell through AWS, which is the biggest cloud hyperscaler in the biz. Second biggest is Azure, and they're even on Google. Okay. Google Cloud is the third biggest. They're doing business with the bigs. Okay, good. They're a high growth company. Look at that. High growth. They are tiny, 31 million. So this is interesting. They are losing money because they're probably doing a lot of R&D. They're paying a lot of expensive engineers to work at their company. So they're losing money. All right. Now, how much cash do they have? They have $369 million in cash. Hopefully they don't have any debt. They have very little debt. Okay. So they have roughly $350 million in cash. Let's look at their burn rate here. So operating cash flow is $95 million. So at $350 million, and then CapEx is another 21 million. So they're burning about 120,000. So they have about 3 years of cash to operate unless they become profitable sooner, right? So they have 3 years to become cash neutral, or they're going to have to figure out how to get more capital, figure out how to keep going. This is a really small company. I don't know enough to say these guys, this is a really good investment. These guys are going to be very valuable for some reason. If you know quantum computing, you have a big advantage because you could say their quantum computing is going to be a game-changing technology. It's going to be 10 times better, so companies are going to use it. The big thing now is GPU, graphical processing unit capacity. That's what NVIDIA sells. But I don't hear much about quantum computing. What's it used for? What are the use cases? Who needs it? Is it just for research projects for universities? all that is kind of the studying of this stock, because it is kind of it's a long shot bet. If you get it right, this could be worth $50 billion eventually. And you could be like, wow, man, I really increased my, net worth very quickly on this one. It could also be worth $100 million. It could really be a big loser. It could be a big winner. It could be a big loser. It could be an okay winner. It could be an okay loser. There's just a lot of things going on. It looks like it's really moving today. Was there news on the company? So they got a big contract with the U.S. Air Force. Look at that. Okay. That was 5 hours ago. So you probably picked this up on some type of screener that said, hey, look at this stock. It's up 14%. So do your homework on it. It might be, if anything, might be worth following, getting to know really well, and understanding when would be a good time to invest. I would consider limiting my investment because, again, this company is losing so much money and burning so much cash that they're going to have to really get a lot of contracts to get into a profitable zone. So those are my thoughts on this. This is not in my lane. First, I don't know quantum computing. If you talked about something that I did have personal experience in, and I was like, wow, that technology is going to be a game-changing technology, maybe. But I'd rather wait for companies. Uber would be a good example. Uber got to a point where they had free cash flow in their line of sight. And I read into that, read their financials, read their earnings releases. And I thought, these guys are going to be worth a lot. And I invested in Uber. And but they already had free cash flow in like the next 12 months. They were saying that in their earnings calls. And I'm like, okay, if they hit free cash flow, this company's really going to be invested in. A lot of investors will go into Uber because they now see the free cash flow modeling that a lot of investors depend on. And that assessment was accurate, and Uber's really worked. That's as far from that's my comfort zone of looking at a company that's burning cash, is if they have a plan to get to cash positivity, then I'm like, okay, that's a very important fact. I also need to understand their business. Uber is easy to understand, right? I've been riding Uber for a while. I understand that, hey, a lot of people like the mobility they provide. So it made sense to me. Their international growth makes total sense. They're doing food delivery. That makes sense. Okay. So Uber was a good investment for me. So, all right. So we got through the list, and we're still, I think, in the positive zone in the stock market. Well, the NASDAQ's fallen behind just a tiny bit. That's all right. It did a lot of heavy lifting this week. It lifted the stock market up, and it did a good job in doing so. China continues to be exciting. A lot of my homework this weekend is going to be around China. Look for videos on my channel around China, as well as other topics. And I'll release the videos on the channel as I make them. So want to just thank the people who have signed up for the membership. I really appreciate it, and we'll be emailing everybody out, access to the folder with the tools, and I'll keep making, tools that I think will help in being a good investor, long-term investor. And I'm also going to send out an invite for the member-only video conference call. Live streams are awesome, but I think it's even better if we can just get on a call and just talk through things, maybe ideas that you have, maybe sectors that are working. Look for that to go out soon. If you're not a member yet, I would encourage you to become a member to support the community and the channel. It's $10 a month, and the price will be going up after the first full week of October. You'll always keep the benefit of being one of the early members, and even though the price is going up, you'll keep your current price at $10. So keep that in mind. More details coming out this weekend on that. So everybody, it looks like Mike has one comment on. So quantum is the latest scare. Warnings that everyone should remove their money from banks and brokerages. You've seen this. So why is quantum computing scary? That might be something I search on YouTube. What's quantum computing and why is it scary? And get to know it. I know that AI. I watched Netflix, and Netflix came out with a docuseries on Bill Gates, and the first episode was on AI. I thought they did a good job because they both talked about like the potential really excitement and really how AI could really be useful. But it also talked about a lot of the scary things about AI. And some of the things are quite scary. But, when electricity was invented, some people were really freaked out. They're like, oh my God, electricity. And there was an element of truth in what they were talking about. Like, if you think about when electricity was invented, people getting shocked was completely like brand new. So when people were getting shocked due to electricity, or a person died by being electrocuted, it really freaked people out, and they were really afraid of electricity. So there was an element of, hey, there is reason to be concerned. But can you imagine the world without electricity? We wouldn't be on this live stream. The world would not be what it is today. There's so much value, but it needed to be delivered, created, produced in a safe way, which I think humanity has accomplished. And electricity continues to be super important. Hopefully AI follows a similar path, which is there are potential hazards to it. Let's make sure that it gets done right. And it looks like quantum isn't scary. It's lack of having it in QFS is scary. So I would say that AI, I think there should be some oversight, especially from the government. And, I'm not a big government kind of guy. If anything, I always like government when it stays out of the way of free enterprise. But in some cases, we got to have adult supervision. And I would hate to see AI become a very destructive force. So let's kind of just be a little careful with it. I thought the way the internet was deployed was really well done. Good job, U.S. government. Okay, you stayed out of the way, let it kind of develop into something that's great. But when bad things happened, like there's a lot of legislation around data and the preservation of data and stuff. Those are all positives. So we'll see where AI goes. Quantum computing, I don't know enough about to have any opinion on, but we'll take a look. So I will take a look and get more familiar with it. All right, everybody. It's been an awesome week. Really good returns this week. I am pleasantly surprised that September ended up being what it is looking to be. We've only got a partial day of trading today and then a trading day on Monday. Unless the market completely falls off a cliff on Monday or today, it's going to be a good month, and I'll take it. I was expecting going into September, hey, I wouldn't be surprised if I'd be down a couple percentage points, and in October, the same thing. So the economic data and the conditions around the stock market, I'll take it. I'll take all the green on the screen. So everybody, thanks for attending. Have a really nice weekend. I will see you on Monday, bright-eyed and bushy-tailed and ready to talk about stocks again. And we will get into it. We'll see what next week has in store. We'll see what opportunities are out there for making money on stocks long term. I really appreciate everybody attending. Everybody have an awesome weekend. Have fun, get rested up. and I'll see you on Monday. Take care.